Hello there, folks. Welcome into today's video. I got 4 different things I want to react to in this one. First one up here is Black Friday data. Holy smokes, it's no joke. The consumer is just taunting stock market bears at this point in time. Then I'm going to go ahead and react to this one from Tony Dwyer. Equity prices will end the year where they are currently. So we'll definitely get into that one. I actually want to do that one at the end here today. I want to do this one kind of first up as far as the videos to react to. Upside surprise has led people to be overly optimistic about next year, says Mohammed Al-Alarian. So I want to hear what he has to say in regards to that. And we'll react to this one second. Shopify sees a record Black Friday. So that's one of my stocks. And so we'll hear kind of what Shopify has to say about how people are spending out there and all that good stuff. So appreciate y'all being here. Thanks so much for being here as always, folks. And thank you for being subscribed to the channel. I appreciate each and every one of you. So starting out here, saw this MasterCard says e-commerce sales hit a new all-time high and we're up 8.5% year over year on Black Friday. Shopify hit an all-time high, up 22% year over year. Adobe says shoppers spent a total of $9.8 billion on Black Friday. In the U.S. alone, a new all-time high. So, like I said, I went out there and I did that video for you guys, right, and took all those pictures and videos. And by the way, not a lot of people watch that video, but it is what it is. But, and I told you guys, I've never seen it that crazy, ever. That was a whole new level of craziness on a Black Friday. I was just shocked by what I saw. So, definitely the holiday season's off to a banger start. And, I think way stronger than any bulls anticipated. And the bears are just dumbfounded at this point in time. They're like, the consumer's supposed to be done. Recession. They've been talking about recession. They've been pushing it off. They thought it was the first half of the year. They pushed off the second half of the year. This is no damn recession right here, I'll tell you that much. So now they're pushing off to the first half of the year. And they keep having to push it out. And the consumer is the one that's keeping everything going. And as long as the consumer keeps out there spending, jobs keep there, right? Because that's where most of the jobs are. And it's just everything feeds itself. And the bears are stuck there oh, come on, man. Can our puts ever print? Alrighty, guys, let's react to this one. Upside surprise has led people to be overly optimistic about next year, says Mohammed Al-Alarian.
We want to bring in Mohammed Al-Alarian. He is Chief Economic Advisor at Allianz and President of Queen's College at Cambridge University.
As you guys know, I love to react to positive stuff, negative stuff, everything in between, bullish, bearish. It's all good.
Do you think of that scenario that Shri laid out?
It wouldn't be my base case. It would be my risk scenario. We still haven't adjusted to higher rates. He pointed out commercial real estate. I would also point out a wall of corporate maturities coming in 2025 that are going to start playing out in 2024 because companies will be keen to refinance. It is a risk, but it is not a base case that this will happen over the next 3 months.
I think he also overlaid with that just the geopolitical risks around the globe right now. I think that's part of what has him thinking that this is something that we could wake up any morning and have a bigger surprise.
Yeah, I think what makes people uncomfortable, Becky, is that consensus forecast coming into 2023 was quite negative. Lots of people were predicting a recession. And no one saw the geopolitical developments that
Lots of people are still predicting a recession. Let's be very clear about that.
So had they seen the geopolitical developments, they would have been more negative. In reality, we've done really well. They would have been
more wrong, right?
Yeah, they would have been more wrong. In reality, we've done really well. And I think that upside surprise has led people to be overly optimistic about next year. I'm not saying the baseline is going to be the massive financial accident he's talking about, but I do think that consensus forecast right now is too optimistic about the global economy.
What concerns you the most, Mohammed? Is it demand factors from China or other places, or is there something else that really worries you?
So look why November has been so great. We've had this very unique alignment of 4 things. Goldilocks data for the economy, lower oil prices, lower yields, and lots of money to be put to work.
Okay, so Goldilocks data, not really. Have you seen the consumer sentiment, sir? Have you seen the small business index data? I mean, these are horrible. They're in some of the worst places we've ever seen them in history, those surveys. So we have not had Goldilocks data. Inflation is still running hotter than the Fed wants it. That's not Goldilocks data either. just because we're in the 3s instead of the 9s or
That
8s.
is
That's a freak situation. That's a freak situation. We should never be running at 7s and 8s and 9s. Okay, so 3.2% or whatever, it's not Goldilocks data. So the fact is, we haven't even gotten Goldilocks data. Goldilocks data could still be coming. Let's be very clear about that. We can talk about Goldilocks data when consumer confidence survey starts to come in healthy, and it's anything but healthy. When small business index comes in healthy, when CPI is in the 2s, then we could talk about Goldilocks data. We haven't even hit Goldilocks data yet. Let that sink in.
Peak alignment that has proven incredibly powerful. You showed NASDAQ up 11%, Dow up 7%, S&P up 9% in November alone. So if you look at that alignment and ask how long will it continue, 3 of these factors are facing headwinds. 1, the Goldilocks data is unlikely to persist.
Okay, 1, the Goldilocks data, which is not even Goldilocks data, is still likely coming in 2024. The Goldilocks data is going to be when CPI is in the 2s, when consumer confidence is picking up in a big way and getting back to healthy levels, and small business confidence. All those could play out actually in 2024. None of those have played out yet. If we talk about inflation being killed down in 2024, there's a good probability the consumer is going to feel a whole lot better. Small business is going to feel a whole lot better. The small business index has been below its baseline for 22 straight months. Why has it done that? Because inflation. And it's made these businesses extremely unconfident when their price of everything just kept going up and up and up. If we see that start to get in a good place in 2024, then we can start talking about Goldilocks data. That hasn't come yet. That can still come in 2024, okay?
The yields are going to face significant debt auctions where the buyers are in question at these levels. And thirdly, I don't think OPEC Plus is going to stay quiet to see oil prices where they are now. So that is why you've got to keep an eye on this. November has been absolutely exceptional, and it has really shown on the bottom line for investors. But going forward, 3 of the 4 things that have powered us have a lot more headwinds.
So you think stocks have gotten too expensive?
I think we've seen the major gains. The next few months, I'm not talking about major sell-offs, to be clear. I'm just talking about consolidating at these levels until we get clarity on the things I've mentioned.
It's very possible.
But there's still a lot of money to be put to work. I don't disagree with that. That's the real positive here.
I don't disagree with that. In Q1, I could see some people taking some profits, especially from a lot of the big techs, the Apples and Microsofts and Metas, just all those big techs that have had a tremendous year. I think some people are waiting till end of year, till the beginning of next year to take profits rather than take them right now in obviously this tax year. I think they'd rather take them in January, February. So I don't disagree with him at all in regards to kind of that market sentiment here for the next, we can call it 3 months or so.
So money waiting on the sidelines anytime there is a pullback?
Correct. And you're going to see it also in fixed income. There's an extension trade in maturity that hasn't yet happened because yields came down so quickly. So we're not talking about major sell-offs here. We're just talking about not repeating what has been an exceptional November.
Okay. Mohammed, all in all, though, you don't sound like you're too worried about things. You sound like, okay, maybe it's not as strong as it's been to here, but you're not thinking that there's some massive sell-off necessarily.
I don't. I do think consensus is too optimistic about the global economy for next year, and we can talk about the issues facing China and Europe, et cetera. But I don't foresee a major global recession, for example. I just don't think I do think consensus has gotten carried away a bit after being so wrong for 2023 in terms of the global economy.
Let's go back to OPEC very quickly. You said you think OPEC is going.
So it's important to understand he's not predicting any sort of big recession for 2024 or anything like that. He's just saying maybe people are a little too optimistic, which is a very different tone, right? That's not really a bearish tone. That's just more of a neutral tone. He sounds like a gentleman that's more in the neutral camp right now. When we look at the AAII investor sentiment, there's always around 30% of investors roughly are neutral on the market overall. He kind of seems like he's coming across kind of more in that neutral camp. Not really bearish, not really bullish.
Act to try and shore up oil prices. Why do you think that they had this pause on the meeting that was supposed to happen last week and is now scheduled for later this week? A lot of people were saying it's because they couldn't get consensus on what to do. You think it's something else?
That's possible.
No, I think correct. I think Saudi doesn't want to be the swing producer. It doesn't want to be the one that always absorbs the cuts when there's need be. So they've done it, but I don't think they want to be portrayed as the reliable swing producer. And they want other producers to also take some cuts. You know, Saudi has a major threat over everybody else, which is that it could remove its cuts, and then others would suffer even more. So I think what Saudi Arabia is looking for is for others to participate in cuts and for it not to carry the burden on its own.
Yeah. You know, something I always wondered, I've been thinking about this in regards to OPEC, and this would be a game changer. I have been considering, could OPEC start to break apart over the next few years? We know the demand for oil is likely going to go down over this next, let's just call it decade, right? And as the years tick on, it's going to go down more and more and more. And so, you know, when things get tough, usually, right, people start fighting more often, and you know, they start chasing after the breadcrumbs that they can get. And so I wonder if as things get tougher and tougher in terms of oil demand, I wonder if there's going to be more people, you know, more countries breaking apart off of OPEC and being like, we're going to do whatever we're going to do in this situation. So I don't know. That's just something I was considering that I don't think enough people have considered yet. You know, OPEC was when demand was great for oil overall, you know, they seemed to come to conclusions pretty solidly. But now, I don't know, man. I wonder if there could ever be a breakup of OPEC in a substantial way as the years tick on. I don't know. We'll see. Next one up here. Shopify sees a Black Friday record. Let's hear what's going on here.
Stock shares of Shopify are up today and on pace for their best month ever, although they're still 50% below their 2021 levels. Black Friday sales.
I wish I owned more Shopify stock. Like, you know, it's a position I have in the Patreon portfolio. I wish it was a lot bigger.
Record highs for the platform, up 22%, far outpacing the 2.5% overall increase in spending this year. Here's Shopify President Harley Finkelstein on Squawk on the Street
10X,
this morning.
Folks, 10X.
But one of the things that's very interesting is that sales made by merchants on Shopify using our point of sale system, which is in store, has grown by 33% since this period last year. So I don't think it's just online only. I think it's this intentionality where consumers want to buy from their favorite brands.
And our next guest sees more upside as Shopify continues to win share. Joining us is Ken Wong. He's an analyst at Oppenheimer. Ken, it's good to see you. And I should add, we're only talking about 10% upside for your price target, but what's your gut tell you?
Yeah, thank you for having me on. Look, I think a lot of the upside right now is dependent on what happens, kind of obviously Q4, looking out to fiscal 24. So with sentiment going into the holiday season, initially a little more cautious. Like, I think these results definitely show that, you know, we could potentially.
All right, Black Friday growth beat mid-teens expectations. Nice. Results imply strong setup for holidays. Absolutely. Implied average cart price rose 5% versus 4% last year. Interesting. Could have mild positive halo effect on e-commerce peers Wix, Squarespace, and GoDaddy, he says.
That upside to our numbers, likely upside to consensus numbers, which are looking for growth closer to 17% GMV, and they displayed 22% growth, you know, as of Black Friday.
Wow. Did that number surprise you, up 22%? Is that, I mean, you know, I know when they're in the early growth stages, we'd be like, yeah, of course. But just give me some context around that figure.
Yeah, it's definitely a bit of a surprise. Consensus expectations were for the fourth quarter GMV to be closer to 17%. I think we had been hearing from merchants, from partners, and even from consumers that a lot of shopping was starting earlier in the holiday season than just purely during this Black Friday, Cyber Monday stretch. So our expectations were potentially that it would come in a little light of the 17% that people were expecting. So to see a 22% number, definitely, you know, meaningfully higher than anticipated.
Yeah, it's big when you see a big Black Friday like this. You know, by far and away a record breaker when Thanksgiving was early. Like Thanksgiving was early this year, which means you have more shopping days than, you know, a year where Thanksgiving's on the 27th, 28th, and, you know, Black Friday's the next day, something like that. So it's really big when you can beat.
I think some of this is also,
you know, on a year like this,
just online, right? We noticed that on POS, which is their
look at that move from what, $46, $47 to 73. just in about a 4-week span, 3-week span.
Retail product, we saw growth actually accelerate to 33% from 27% last year. So clearly, this is more of a Shopify thing than just purely a retail dynamic.
Not to go on a tangent, but it is, so I never think of Shopify as being something I'd experience in store, but the fact that their in-store volumes, point of sale volume, were up 33% when we know in-store traffic or sales were only up, I think, 1.1% overall. Tell me, where would I encounter Shopify at the checkout? Would I know as the consumer?
Yeah. I think as a consumer, you probably wouldn't realize it, but I think some of the consumers' favorite brands, whether it's Allbirds or Warby Parker, they have both a big online and an offline presence now. I think what's more important is Shopify is no longer just a platform for, let's say, online first, hybrid second. Over the last 18 months, we've seen a much bigger push to just pure offline retailers. So this is something that, again, I think the trend is still early, but we shouldn't just purely think of these guys as an e-commerce direct-to-consumer type of a play.
Right. Sometimes I think, it benefits them if we think of them that way instead of something more traditional, but I totally take your point. Let me ask, as you, across the rest of your coverage space, what are your big conclusions coming out of Black Friday, basically Cyber Monday now?
Look, I think it should be a net positive for companies levered to online sales, e-commerce. We also cover some more down market competitors in Wix and Squarespace, GoDaddy. I assume that they likely are also seeing kind of more upbeat sales trends. Further up market, we have BigCommerce. They also put out some Black Friday, Cyber Monday details that suggest double-digit growth on their platform. Across that entire group, and I assume some in the e-commerce world, should probably see a bit of an uplift based on what we saw over the weekend.
And finally, how much more is...
So another way to look at this is if retailers are going to have a stronger than expected holiday shopping season, which, after seeing some of these numbers, and we'll see where Cyber Monday shakes out, but after seeing some of these numbers, there's a good probability some of these retailers are going to run through inventory and have to do a lot of big purchases come January, right? January and February. And so obviously that bodes pretty well for the economy, right? That bodes well for a lot of different folks. Like, imagine you sell through, a lot of clothing and you sell way more clothing than you thought you were going to sell through. So now your inventory is low, so you got to place some more clothing orders. Well, that's obviously more business that other countries are going to produce that clothing, right? It's not like the United States, we produce that. So that helps them out and that helps the global economy out, right? So, many various factors go into all this game, and ultimately a better holiday shopping season is definitely something that's very big for the economy and retailers.
People are looking through the numbers and going, wow, 8.5%. To me, it feels like, we're still at such a nascent stage of market share growth or penetration of online to in-store that we should still expect to see numbers at least that strong, I would think, but maybe I'm being too blasé. I mean, how much more sort of runway is there for these online players to grow in terms of the total retail market in this country?
At least a decade or two.
Yeah, that's a great question. Right now, as a percent of retail mix in the U.S., they're still in the high teens. I imagine that we should continue to see that penetration number move up, at least into the 40-50% over time.
Wow.
So I don't think offline retail is completely going away, but clearly, from a consumer user perspective, whether it's on
That's why I feel so comfortable holding stocks like Shopify, holding stocks like Amazon. And Amazon's the third biggest position in the public count. These companies have, 10, 20 years still of growth ahead of them, just from the, e-commerce side of the business, never mind anything else they got going on.
Your tablet, your PC device. I think we're finding that more and more consumers are purchasing off the couch than in store. And I think more importantly for Shopify, it's not just purely a growth dynamic. Right? This is the first year they're going to have profitability. We're assuming that by fiscal 24, they might be looking at mid-teens margins, $1 billion of cash flow, and that number should continue to grow and attract a different investment
Shopify month to date, 56 flipping flapjacking %. Booming.
Profile than just purely a growth-oriented mindset.
I think I read that something like half of the online purchases Black Friday were made on a smartphone, which makes sense. That's where we are. We're on the couch. That's what we're doing. Ken, thanks so much for joining us today. Appreciate it.
Yeah, appreciate you having me on. Thank you.
Ken Wong of Oppenheimer.
All right, next one up here. Tony Dwyer, equity prices will end the year where they are currently. So he's saying Santa's not coming to town in December.
Strategist Tony Dwyer joins us now. Tony, what does chillax mean?
So I'm in the kitchen. How many times that the teenagers came home and did something I thought was outsized and outrageous, and I would have the normal dad reaction, and they would say chillax, like it wasn't as big a deal as they thought it was. So that's what made me think about it. So
if I said that to my dad, he would throw me out of the house.
I told David to chillax 5 minutes ago.
Did you? Yeah, I think, yeah. We use it here, too. I'm being told to chillax, like an old dad as well, Tony. But why investors' approach to the market? What do you mean by that?
So I think Sarah, had a very interesting, you guys have been talking about, they were fine. They were fine. And so when you're at a historic oversold level like October 27, when bond yields are spiking on the Treasury supply and they're fine, that's a reason to expect a pretty snappy bounce, which we got, as you guys have talked about a lot. The environment then was ripe for a rally in the bond market and a rally in the stock market. Now everything's kind of fine. You need that next catalyst, especially if I suggested that back on the 27th when we were looking for the rally, if it was going to be 9 or 10% by the end of the year, everybody would have taken that hands down. And now that it's up that fine, apparently, is good enough for a further rally, and that just doesn't match with our data. So we're just, by the end of the year, guys, I think there's not a big story to make, and that's the chillax theme. It's just I think that prices will end the year around where they are. So if they go up a little bit more, they'll pull back to where they are. If they go down some and on an overbought correction, they'll lift back up to where they are.
Interesting. All right, so let's assume we end the year, at least as you say, roughly where we are right now. What are we thinking about next year at this point, Tony, and how, if in any way, is your forecast being driven?
A really solid year for the S&P 500 this year. Will likely end somewhere between 15 and 20% up this year. That's a really solid year for the S&P 500. Definitely, if we can do that every year, which we're not going to be able to, but if we could do that every year, we're doing pretty well for ourselves. But obviously, coming off last year was a rough year.
On the ground right now in terms of retail sales or out of this earnings season?
It's funny when people like me come on TV and they say there's we're going from a 27% chance of a recession to an 18%. I don't know what that means. You either expect a recession or you don't, and I do. We've had 22 months in a row of negative leading economic indicators. It's never been at this level without a recession. We've got money supply that's still negative. So all those things, guys, this is all about money and how the money can end up creating better revenue and better earnings. As you guys just described with the retailers, there was pretty good disappointment there. So unfortunately, I think we're in this zombie environment where the expectations, until you disprove a soft landing via either an acceleration that only comes with a significant...
Well, seeing Foot Locker, I remember I got to order some Foot Locker stuff today, man. They got some good deals Cyber Monday today.
Sustainable drop in interest rates, or you actually go into a recession. That's the only way, to me, that you can really kickstart an improved outlook for money. The market typically bottoms in a recession because interest rates on mortgages, corporates, treasuries, they all come down significantly. Even in soft landings, they come down significantly. So our base case for next year is that we're in a recession. If we're not now, we will be. That's going to create a much more dramatic drop in yields than folks expect. And guys, that is just going to kickstart a real significant recovery toward the end of the year. So it really depends on the interest rate environment as to where we are a year from now. And I think it'll be in a better place, but not without a little bit of choppiness ahead for sure.
Well, a little bit. I mean, if you think that there's going to be a full-blown recession, Tony, that's not in the market as far as our earnings expectations in the S&P. So that's a little more than...
I love when people make predictions about a recession and then the recovery of the recession. It's so unrealistic. So unrealistic. One predicting a recession is a fool's game. We all learned that this year. Every freaking economist out there, the most respected ones, are all predicting recession. They're all wrong. So that's a fool's game. And then to try to predict we're going to bottom at this time after the recession, that doesn't also work either. Like you could have if you actually do go into a recession, that could be very quick. It could be over fast. It could be a medium-term one. It could be a long-term one where it's vicious for like a year and a half, 2 years, 2.5 years. And things just get worse and worse and worse for 2 years straight. Try to predict. Come on, man, that's a joke.
A few bumps, don't you?
Yes.
What do you expect? You expect a drawdown like 20% that we could see in a recession type scenario?
So a lot of the markets there, as you know, already. So when you're looking at, say, Target, it's not a comment on Target, or the retailers we've talked about, or the financials. Even back in October, when the banks are down 50%, when the equal weighted stock is testing last October 22 low, when you've had 33% from 52-week high for the average stock in the NYSE. I do believe that a lot of the market is discounting a recession. And in terms of earnings, TJ, my earnings wizard at Refinitiv, sent me the data on the Magnificent Seven's impact on earnings. And earnings are negative 2.5% if you take out, this is as of early November, if you take out the Magnificent Seven.
And so imagine if the rest of the market starts coming through with some good earnings, right? That's something to consider there. Appreciate everybody joining me as always. I need to hop on Twitch, folks. If you want to join me on Twitch, pin comment down there to join me. I got to hop on there right now. Much love and have a great day.